Okay, guys, so what we're starting off today with is we're going to do the Globex again. We'll start getting in a little bit deeper into the Globex, and then I'm going to leave you with where the markets are headed for the week again and what the US dollar is doing. I think by us doing that, it'll give you a lot more perspective on what we're still looking at and the directions that we're looking. My bias still hasn't changed, and the reason why I'm teaching the Globex to you is it's giving you more insight, more quick, fast trades, guys, to build your accounts, and then you can be, as you're focusing on the bigger plays. So first of all, guys, I'm just going to revisit the NQ, okay? And I probably should have this on, literally, you know, let me just take off this for a second. I should have this on a 20-minute chart, but I just put it on for me to be able to quickly identify the Globex highs and lows. So Danny, met 1300 in the past 2 days on SIM using the Globex strategy. Kudos, Danny. It is simple, isn't it, guys? Quick, fast money, yeah. 2 contracts, right? So it's good. Kudos, Danny. So Danny, you're going to be the next instructor, all right, brother? Okay, guys, here we go. So the rules around the Globex, guys, in simple terms, is we look to the roughly 6 o'clock. I said 6:30 last week in our first session, but I like to start looking at trades in and around just after 6 o'clock to see can I capture some of the good movements. So we look from the 1 o'clock close to the 6 o'clock open, or 6:30 if you want that immediate rush. And then we just put 2 horizontal lines top and bottom as we've just done here. Does everybody see this? The 6971 to the 6905 area. So Globex high and Globex low. Now straightforward once again. Good afternoon, Mr. Thomas. I did get your text, and I will reply later today. Also coming across onto the ES as well. Again, the 6 o'clock, okay, back as far as the 1 o'clock. High and low, guys. We're not looking to trade internally on the Globex high or low. We're looking for the hooks, both top and both bottom here, to be able to trade. Now, we started this on a 60-minute today just to get clarity quick and fast. Now, what we're going to do, guys, in simple terms is we're going to start taking the ES, for instance, on a 20-minute time frame. Oh, Thomas, yes, amazing, right? So I'm not looking to this hard right area here, guys, because this is today's session. I'm just doing a recap. So we come back here to the hard left. As we can see here, we've got a rally base, drop base, drop base, drops. We're not seeing any clear, we're not seeing anything clear here as picture perfect or narrow risk. So what we're going to do is we're going to drill it down minute by minute, okay, until we come across the picture perfect example. Still nothing here. Does everybody see that? So we're going 19, 18. I know, guys, this is extremely painful on having to consistently drill down the time frame. So what I'm going to do is jump every other minute until we start seeing pictures come in. We do have a rally base drop here. But again, I'm going to consistently drop. I'm going to go to 13 minutes in this case here, just to speed up the process. So again here, I'm not seeing anything quite clear or dominant. So I'm going to go straight to a 10-minute time frame. So I keep going to a 10-minute time frame. Now I'm not seeing anything here, but what's appearing here? Rally base, drop right here, guys. So we're starting to see a little bit more clarity coming into the marketplace. Now I'm going to do 8 minutes. Okay, so this is some time, you know, spent going back over this. Now we lose perspective. Now what I'm starting to see here, guys, is very, very clear. Do you see that upper wick? I know when I drop down a little bit onto lower time frames, I know there's going to be a base area here, so it could be a beautiful capture as we move forward. Down into 5-minute charts, guys. Okay, keep going back in time. And in this case here, we still don't see anything. Does everybody see that? So I'm going to go 4-minute time frame. Okay, so go back in time. Keep going. Okay. Okay, so it's becoming dominant and clear now. So let's jump to a 1-minute time frame. Okay, so we go back on a 1-minute time frame. Going back in time, it's going to take a little bit of extra effort. Oops. Here we go. So if I get to a 1 minute time frame, have I anything here, guys? Have I anything showing up here in the ES in a 1 minute time frame? No. So there's nothing here at the minute, so I need to start going back up the time frames. So as I start going back up the time frames, guys, of course I move my yellow box, which I'm going to drop back down. Keep going back in time to see can I get a nice glowback area. So we come along here and there's still nothing here, guys, is there? Right, so we go 3 minute time frame. Turns out the smaller time frames, the less potential are. No, Randy, it's all the same. You're just looking for a quick 3 to 1, the lower time frames you go to. Just in the time frames, Danny, what time frame did you pull yours off today? Okay. So as we can see here, we've got a drop-based drop sitting right here. Okay. But I won't take this drop-based drop in this case here because it's too far away from the pivotal area. Do you see this? On the ES. So as I move up forward, I'm going to go back to my 5 minute time frame to find the ideal picture. Okay. In this case here. We come along here, and I'm still not seeing anything on this 5 minute chart, guys. So I'm not seeing anything resonating with me on this time frame. Keep going back. We still don't see anything here. One of the things that I do on my own personal trading, guys, is I'm going to take this to a 1500 share bar. Okay. So if you take this to a 1500 share bar, you can start to see a little bit more information appear internal. If I have enough data, I don't have. So we keep going back in time. How do we find this? Come on. Be nice to me. Oops, there we go. We go 2,000 bars back. Okay, I should grab. So whilst I'm doing this, going back in time, guys. Okay, so we're out of bars again. Any questions on what we've taught from last week? Come on. Load. I knew I did something wrong. Okay. Let it load. This hamster needs feeding. So keep going back in time. I find this area. Okay. Keep going back. Okay, keep going back here. So I have to load in more data again. It's amazing when the date goes on, the amount of bars that are printed. Come on, internet. So I go 4,000. Okay. Yes, at 11 o'clock, Terry, Eastern, or sorry, PST time, if the trades haven't triggered, you should always close out your trades, because then you're getting into dull times, right? The doldrums, which can create a huge issue. Okay. Now, as we can see here in a 1500 share bar, right, we're actually seeing what I like here, which is this rally-based drop-based drop. Does everybody see that? My stop is going to come up here to the 72 or 75, 71, 76 to 77, 49, 23. Now, that's just giving it a little bit extra pips or ticks if you want here at this moment in time. Now, it's a shallow retest, but you see how we got the rally to the base to the drop to the base to the drop, and it was narrow. If you come back here in time, it really did overshoot nearly the runway here. Do you see this? But it did drop down beautifully to give you a nice return here in this case here. So if you do this here at this moment and add in your 3 to 1 in this case here, which is, or sorry, your 1 to 1, which is going to be 200, right? And our 3 to 1 in this case here, which is going to be 4 to 1. Notice how we slightly missed out on our 3 to 1 in this trade. Does everybody see that? So you slightly missed out on your trade in this case here, but you didn't lose money because why, guys? Why did you not lose money? Because we hit the 1 to 1. So if we're risking $100 here, and we sold 2 contracts in this case here, and it hit 1 to 1, what would end up happening is at this point in time, would have been stopped out for a 0 at that point in time, bar commissions, okay? Got to the 1-to-1 is right. So if we come across onto the NQ, and we do the same thing on the NQ, guys, and we start looking to see where the zones are here. So again, just following the process, guys, starting out with your 20-minute time frame. Okay, looking straight away to see is there any good quality zones. So the areas we're looking for consistently with our rules is we must mark a minimum of 2 what, guys? 2 supply zones. In this case here, I'm not seeing anything here just yet. So we keep drilling down in the time frames. We go 19. There's nothing showing up here in the 19, guys. As we can see here, there's nothing showing up here in the 19 also. Going to jump straight to the 15-minute time frame. Okay. Looking here, I'm not seeing any quality zones in the 15 either. Looking up here to see can I capture anything here. Starting to get very, very interested in this wick up, wick down, which is a professional level. We drill it to the 10-minute time frame again. Okay, looking at the 10-minute time frame, we're losing perspective just here. As we can see here, we're seeing the professional level, drop base drop in a lower time frame, with and also another drop base drop here. So somewhere within this vicinity, we could see something beautiful appear. So I'm going to go straight to a 5-minute chart just to speed up the process. Okay, and go back in time. As we can see here in a 5-minute process, we're not seeing any good quality zones in this essence, so we keep going back to the left-hand side. As we can see here again, guys, on a 5-minute chart, professional level and a nice drop base drop in this essence, or in this case here. Let's start taking it a little bit slower to a 3-minute time frame. Okay, we'll keep drilling to the left-hand side. As you can see here, we couldn't get into anything just here. Okay, and then all of a sudden, we start to see what here, guys? Rally base drop right here. Does everybody see this one here? Now, this looks a little bit too far away in this essence, plus you want to give it a little bit of extra wiggle for your comfort. Does that make sense? I'm just going to look at this. It's very, very good structure, rally base drop in this case here, but let's have a look as we drop down into a 1-minute time frame. As I drop down into a 1-minute time frame, okay, keep going back here to see do we lose the picture. As you can see here, we have lost the picture in this case here. So I'm going to go back again. I think was it a 3-minute chart in this essence where we found this. We keep going back in time. Beautiful little rally, base, drop. Who likes that structure? Was it dominant and clean? Was it dominant and clean, guys? Is that the ultimate picture of a rally, base, drop? You cannot get it any cleaner than that, guys. Okay? So in this case here, once again, guys, right click by Jeff, yes. I believe you took that one short today, Jeff, did you? Yes. Okay, perfect. So in this case here, if I come along here, come in 200, oops, and then I put in my, again, 3-to-1, which would be the 400% retrace on your Fibonacci tool to give you 300. That's a $600 zone, yes, Jeff and Valerie, but still, it ends up good. So as you can see here, guys, okay, it's a big zone here, which you could tighten down. But as you can see here, it has hit your 1-to-1, right? Follow back and come all the way back down to here, okay? So at 11 o'clock Eastern time, you would have closed out your trade in and around this time here, okay? So you'd have literally made money, but all trades should be closed out consistent. Does that make sense? Now think about it, 1-to-1, right? It did rally down as far, drop down as far as the near 9621.22 handle. But again, it's a picture perfect zone, rallied into price, based, dropped, and moved away. Okay? So by consistently taking these guys and drilling them down into smaller time frames, you could have shrunk this zone as well if you went to a 1,000 share bar chart to reduce the risk on the zone. That's what a lot of people will do, something that I actually do a lot of when squeezing the risk-reward ratio, especially if they're bigger type zones like this. Does that make sense to you guys? Also, one of the things that I gave to you last week was, notice in this case here, this is just taking the zone as is. This is literally a 30 pip zone. Does that make sense? Okay, 30 pip zone, okay? Now, I did say on the ES, let's see, do you remember, and in Q last week, what is the maximum point value that you can take on zones like this? 10. Beautiful. So when you reduce to 10, right, so we're going to go to about 26. So we come up here to 26, guys, because we're minimizing our loss to a 10-point zone. Notice how we've squeezed it. And the only reason why we squeezed it was very simple, because this 30-point zone that was available, we should have never taken. Look what just happened, guys. Instead of getting just over a 1-to-1, you ended up, what, guys? Getting a beautiful 3-to-1 minimum. You had set it at 25 and they didn't take the trade yet. So you remember, guys, just to reiterate with the rules, find the picture perfect levels, make sure you set them at least at 1-to-1, okay, and then the other at 3-to-1. No more max risk than 10 points on the zones. Does that make sense? Are we good? So Terry made 70 off that one. Beautiful. So any questions on this, guys? Look, guys, it's just literally 3-to-1s. Can we use the same zone if it never hits? Absolutely. 100% you can, Jeff. One of the things that a lot of students get caught up on is with dropping down on time frames. You start at the 20-minute, 19, 18, 17, so it goes slowly down, guys, and you're looking for the picture of a rally, base, drop, or drop, base, rally, base, rally. The minute you find that picture, stop. Then it's a max risk of 10 points if it's over, and you set it at 3-to-1 and 1-to-1. Set your trade no more than 2 losses and no more than 2 wins. Are we good with that? Simple, straightforward, guys. Any other questions before we delve into the correlation section? So Thomas is having a few light bulb moments, my friend. So think about it, guys. It dropped from 26. So you got over 26, literally 26, down as far as 97. That is a nice drop in price. Does that make sense, guys? Okay. So a beautiful, quick return on this. I used this strategy for the past 5 days and have profited over 2,478. Terry, kudos to you. What I want you to do, Terry, at this moment in time is keep doing that for the next 3 to 4 weeks. Once you're comfortable and build your confidence, right, having a $2,400 or $2,400 return times 5 is a nice return over a monthly basis. Once you back in that monthly basis return, then you can start slowly on live money. Does that make sense? If you get stopped out in the zone, wouldn't it be used up? Correct? Yes, Jeff. So basically, if you get stopped out in the zone, it's done, right? Move on to the higher one. Does that make sense? Okay, perfect. Keep this simple, guys. It's a beautiful little strategy. And you're not making huge movements, huge price movements. You're going for a 1-to-1 to take your risk off the table, and then you're going for your 3-to-1 to make the cream. That's basically what you're doing at this moment in time. Same zone, Jeff, can be used twice only if it's shallowly tested. Now, I'm not the biggest fan for new people doing this on a tested zone. I would prefer you to keep it simple and straightforward and always have your zones fresh. Are we good with that? Okay, I want to take as many questions on this, guys, especially just to get clarity. Okay. Beautiful. Happy with this, guys? Okay, so next Tuesday will be great to see your progress as well. Randy, if you're struggling with the strategy, I'm here for the next 2 weeks in Irvine, so by all means, stop in. And anyone that's struggling, reach out to your education counselors, and I'd be happy, you know, spend 15, 20 minutes just looking at what you're doing, just to clarify as well. Okay. Good, Thomas. Perfect. So let's do their correlation piece at this case here, guys. So again, guys, I want to just set up what I'm looking at on the marketplaces here at this moment in time, based on a broader market aspect. Now, the broader market aspect is crucial when you're trading, guys, because you need to know where the market is headed on the bigger time frames. Once you understand where the markets are headed on the bigger time frame, that will literally ease you into being able to take longer term positions. I'm big about the dollar correlation because in my eyes, the dollar correlation in simple terms allows me to use the inverse correlation to commodities and currencies. So as we spoke about last week, which I'm always admitting, right? So my big takeaway from today is not to ignore those little 5-minute zones. Absolutely, Randy. So in this case here, guys, I built out the weekly time frame on the dollar index last week. I'm still anticipating the US dollar to get into the 98.59 handle. That's just the view at this moment in time. It's starting to slow down a little bit, but I'm still anticipating it to get up there. Take a look at my daily time frame at this moment in time. And as I'm looking at my daily time frame here, excuse my spelling in this case here, we had the flip area, we had the break of the pivot, and then we had the continuation pattern. Now, it did break this continuation pattern, but it worked beautifully off our lower level, which rose again, which gave us more bullish or bearish trades in the inverse. Now, what I'm looking here for at this moment in time, and I want to write this down here, guys, so you can take a good capture of this. What we're starting to see in this time frame at this moment in time is we're starting to see that drop base could be drop. Now, what this is this is looking like it could be a flip area. What was demand becomes what? What was demand becomes supply. If it gives me a leg out in this case here, right, you know, you cannot trade the Dixie, guys, right, but this is going to give us guidance into gold, silver, and other commodities plus currencies. So once I get the drop base drop in this case here, we could have a flip area. So what I'm going to do here at this moment in time, I want you consistently watching, okay? If you're watching this drop, in this case here, base, and we're going to look at it as a drop, we're not sure whether it's going to be a drop just yet. What I want you to do is, if it does drop in here with an aggressive leg candle, we are going all the way back into the 94 handle with the US dollar at this moment in time. Now, it could break through and then snap back, but I'm watching carefully that drop to the base, and I'm anticipating this level will hold is what I'm anticipating, but if I'm wrong, I'm anticipating price to flush to the 94 handle. So I'm still bullish the US dollar, but if this closes below the 95.47, then I'm looking to get short the dollar long commodity base. So that leads us into the gold, the first inverse correlation segment. Now, just to recap again, guys, we don't have really much guidance when it comes to the weekly time frame at this moment in time. What I'm still loving, and what happened last week here, guys, as we explained, price closed below the 1219.70 handle. So we got a solid close, which opens up all of this profit area to the downside. We've got an aggressive rally to the top side, but we're starting to drop again. Does that make sense, guys? If you take a look at where we are at this moment in time, is there anything stopping the gold futures contract dropping down to the 1119 area? Is there, guys? So the 1190 area. So we're still biased based on our US dollar segment. We got an aggressive rally back up into the supply area here, but the direction still is to the downside. Now you can look at time frames, internal time frames, lower time frames, to take other trading opportunities. So let me just switch to 60 minutes out for the moment. So this was the zone we were looking at to hold as it was continuing down. So if we come back out to the 120-minute area, haven't we got a beautiful drop-based drop here where price hung around for a long period of time, yes, and eventually has collapsed. price has negated this demand at this moment in time because it's dropping and it's basing, so it should clear. What I would say to you guys at this moment in time is to watch what happens here. If we get a leg candle on the gold futures contract to the downside at this moment in time, what actually is going to give us is a beautiful drop-based drop, also with a flip area. So I would then be anticipating to get short gold futures contract at the 12.2680 to the 12.2910. Use your own judgment on this, guys. It's still only forming at this moment in time, and there's nothing to stop us. There's nothing really in that 12.15 area. So my bias is still short on the gold futures contract at this moment in time. Now, if I come along to silver at this moment, silver is a tricky one, guys, to be straight up honest with you. So I'm going to skip it because we don't have profit top and we don't have profit bottom. So if I'm taking a look at this chart at this moment in time, I can see we're range bound at this point in time. We probably have profit from the 1280 down as far as give or take the 1240. It's a 40-cent move, but it's not what interests me as a trader. I'm about bigger profits and watching where price will head. So getting involved in the futures contract of silver at this moment in time will not yield me to a higher probability trade. So again, I'm going to move on to the NASDAQ. And as we're still predicted from last week, we came in here into the NASDAQ. And when we built out the NASDAQ, as we built it out last week, what happened straight away, guys? It went back into our what area? Went right back into that 7, 11, 19, 48 area, and it dropped aggressively. Does everybody see that? Once we do this again, nothing has really changed, right? So I'm still biased. My bias is still short the NASDAQ. Again, take due diligence and care when actually trading, guys. Looking at the same picture, oh my God, I'm in love with this one. Drop, base, drop. Look how they even left the area. What it looks like at this moment in time is dropping, it's basing. But again, guys, there's nothing to stop the futures contract getting down into that 6,200 handle. Again, guys, between your supply and your demand area, don't look for any more than a 75% run between the two zones. Be conservative, and even 70%. Leave some money there for the poor novices that will be selling into the demand area. So my bias still at the moment is selling short the NASDAQ because of clear wide profit to the downside, guys. So you can drill this down as far as your 60s, 120 time frames, depending, or down into what I love to do is down into 10, 20-minute charts to take advantage of these sell-offs, okay? Some beautiful sell-offs happened today. So that's the NQ, guys. Really no change at this moment in time, just a beautiful setup. We take a look at the ES at this moment in time. Looking at the ES, guys, oh my good gollies. Where are we about to arrive to on the ES again, guys? Back into the 2768 handle or 2769 handle on the weekly. We're looking at Goliaths, right, in this stage here because they're big weekly and daily levels, which are going to take time to do what, guys? To get through. Now, my anticipation of looking at the direction again on this, on the daily and weekly, is there's nothing to stop price from falling, guys. Do you see this? There's absolutely nothing to stop price from falling to the downside. So what I'm looking at here is still shorting these areas because these wicks here has already chewed away the stack of buyers, so there will be no more filled orders in this case here. So there are unfilled orders. So in this case here, again, if you're going to get short on a lower time frame, right, from in and around the 270, 60-ish handle, look to be taking 70% first, 70% between the area from supply to demand, only 70%, 75 at max. If you're looking to scalp the markets or take quick intraday, you're still leaning towards a biased direction. Again, tomorrow, guys, with the Globex, you're looking at the Globex section again at more or less the selling opportunity. If it comes into a buying opportunity on the demand side and the Globex, great. But once again, we're looking at this. Let's come to YM. YM overshot the runway, which is okay, but snapped in. So we're starting to see the YM in this area here on the weekly time frame. As we see the YM here, we've got a drop to the base to the drop. Beautiful structure plus flip. We're getting pretty deep into this level, but it's still a weekly area and we haven't taken it out just yet, okay? So this is sort of leading the way for strength YM at this moment in time in the Dow Futures contract. Coming along here, I'm going to adjust my line slightly, guys. We've got the rally to the base to the drop to the base to the drop. You all know I love to do my combo zones. So we're still sitting in that 25,000 handle in the YM. I am not interested in selling the YM because it's a lot stronger than my other two broader markets, futures contract on the NASDAQ and ES, guys. Does that make sense so far? I know I'm plowing through all of these, but we have just a short period of time together. Are we good with this, guys? Perfect. I see Jeff is typing there, so I'll wait for your message, Jeff. Yeah, Jeff, it definitely is still in the weekly zone, but it looks a lot stronger, okay, than any of the rest of the zone or any of the rest of the broader markets. So always picking the weakest, right? The weakest is the key at any given time. So let's move forward on to some of our currencies, okay? Okay, so this is currencies in this essence and time here, guys. So if I come along here again, guys, I know I'm in this demand zone here, but again, guys, I'm extremely because of the dollar direction at this moment in time. I'm looking at this drop-based drop. So as price is popping back into that 1509 area or 1551-ish area, we're then going to be sitting in the weekly, and we're also going to be sitting in the daily area in this case here. So again, guys, I'm looking to sell short the Euro USD down into the 112 handle. Beautiful inverse correlation between the dollar in this case here. Now I want to add in a little bit of extra information for you at this point in time. I had it earlier today. Let me shrink this for you. Okay. So this is what we call the global interest rates, guys, okay? So central banks' interest rates globally. Now, you cannot do this on the futures market. So some of you literally, right, and I'm just going to give you a brief overview because this is what next week's session will be about, the carry trade situation. So as we can see here, we're selling short the Australian dollar, the American dollar, which the Fed rate or interest rates are at 2.25% at the minute. So we're going long the US dollar, but in the same time, we're looking at the European interest rate in this case here, which is actually 0%. You see that? So what we're actually doing by saying we're selling short the euro versus the US dollar or the futures contract of the euro, meaning we're actually selling short a lower interest rate currency versus a higher interest rate currency. Does that make sense? So interest rates will have a huge bearing or impact on the direction and strength or weakness of a currency going forward consistently. So literally what ends up happening here is, on our price action chart, this is derived. These directions have been derived from Fed policies or governmental policies globally. So as we're selling short the futures contracts, so Randy, Dixie goes up, EC goes up, no. So Dixie, because of the higher interest rate, is bringing more investment into the currency, okay? Which means Dixie will go up, be strong, euro will go down, right? Meaning we will be selling short the futures contract of the EC, okay, guys? And the reason for that in the spot Forex market, and I'm just going to give you a brief overview before we move forward, is that if I, for instance, opened one standard lot on the futures contract, in the spot Forex contract, I am selling short $100,000, give or take, of US dollar, right, versus the euro, which means I'm actually buying US dollars, selling euros, and buying US dollars. Now, everybody that understands or have been at a grad event with me, I always talk about rollover. Rollover is huge. Rollover happens at 5 p.m. Eastern each and every day, bar the weekends. Now, if I'm selling 100,000 worth or buying 100,000 worth of US dollars, that means I'm controlling a large amount of money. So at 5 p.m. Eastern, just in the spot Forex market, that means I'm getting paid interest on holding the larger interest rate currency. Annualized, the difference between the euro and the US dollar is 2.25%. So on 100,000, you would make just shy of $2,250, guys. So that's where the segment is headed tomorrow or next week. Is going to be all about carry trades and how you really can start really more predicting these directional plays and holding on to them for a lot longer, guys. Okay, so maybe that was a little bit confusing, but I will delve deep into that as we move forward. In this case here, we're looking at the Swiss franc. Again, I'm still bearish the Swiss franc down into that 98 handle at this moment in time. So nothing has happened or nothing is changing there. As I said last week, every time it pops up into supply, keep selling it to the downside. The British pound, guys, in this case here, British pound, I have no love for this at this moment in time. That was my answer last week. Same thing, guys. Too much governmental and political problems with Brexit going on at this moment in time. I don't have a political view, but this chart is totally out of sync. You can trade it based on the chart information, but I just like my probabilities of correlations consistently. So we're going to skip that. Come along to Canadian dollar at this moment in time. Again, we're not looking at Canadian dollar. Why are we not looking at Canadian dollar? So when I'm looking here at Canadian dollar, I don't have any what, guys. I should be selling what? Short Canadian dollar because the inverse correlation. I'm in the Canadian at this point long. You can be in the Canadian long at this point based on oil's correlation with the Canadian dollar. But based on the relative correlation directly with the US dollar, be extremely careful because there's not a huge amount of profit in the Canadian dollar. Oil was a great trade today if you watched it early in the day, and it's moving beautifully. Now we come to JY. Okay, again, JY, we're going to be selling short. But the problem why we're going to be selling short JY, we're running into big demand levels on the 88 handle on the futures contract. So we're out of opportunity on this, no more profit. So we move on. We're only interested in taking the higher probability areas. Now we move on to TY, okay, the treasuries. As you can see here, guys, we're sitting right in demand. Does everybody see this? I'm loving that we're retesting the drop-based drop here. So I'm going to trade with the trend. Okay, in this case here, 117.25 to 118.08. In this case here, we're sitting in demand at this moment in time. So I'm not looking to sell short this. I will take some intraday TY trades to the upside, okay, because it's just clearing away this daily area at this moment, or just stay away from it. Talking about the 30-year, okay, 30-year is about to break lower once again, guys. So when looking at the 30-year, if we take a look at the weekly time frame, I'm loving the way the drop-based drop is coming in here. That's what we talked about last week. So if we take a look at the 30-year at this moment in time, these are just messes on the chart. So I'm not expecting price to really hold. The level that we look at on the weekly time frame at this moment in time to hold will be the 129 a quarter handle. So what I'm anticipating, if we can get a drop-based drop in this area this week, we're opening ourselves up for some beautiful profit on the U.S. 30-year Treasury bond into next week. So this should be on your hot list for next week. We come along here, beautiful once again, guys. Look at this, rally, base, drop, base, drop, base. So we're about to take out this once again, okay? So we keep going down to the left-hand side, and we keep going left. So just keep going left. This is not a great area. It's a bad structure, guys. So I'm going down into the left. Still nothing until I get into this beautiful, I know it's retested area at the 128 handle in this case here. So once we get back and have a look at where we are position-wise, if we can get a leg out on this area here, this is going to open up once again a beautiful trade to the downside. Does that make sense, guys? So that is amazing profit on the 30-year at this moment in time, and I'm still very bearish bonds on that at this moment. Now, if I come to crude oil and take a look at crude oil. Now, crude oil, guys, with everything that's going on politically, what we talked about, we're leaving it alone at this moment in time. Looking again at this handle here, okay, this handle here is at the 61 handle. We're right in that weekly, and it's a monthly area as well. And again, we're looking at it coming a little bit lower. So we've been buying the bounces today on oil, and especially Arthur Evans has been buying it a lot and is doing extremely well on it. Okay, so we're expecting price to get back now into the 60.46. And with all the sanctions and everything else that's going on at this moment in time, I'm anticipating that we're going to get a lot more demand for oil, which is actually going to drive oil prices up. We're not ready to do a swing trade yet on crude oil futures, right? It is just little bounces at this moment until we see the real institutional buy orders come in. Once that happens, guys, I'm anticipating a target all the way up here at the 74 even handle. Okay, guys, which opens up a lot of profit potential for us. Off to the races, absolutely. So looking at the PP zones at the supply block. So these are not really supply zones, Randy. They're after a movement in price. Will price pause on the way up? Absolutely. Look from peak to peak when looking for good quality zones, especially in higher time frames. They will lead you in the right direction of where price is headed. Does that make sense? You can get little bounces, but it's going to really go through it, okay? Okay, guys, so we've gone through everything today. So keep on the profitability side. If you're unsure of a trade, guys, let it pass. Make sure you follow your process at all times. And as you do that, you will become more and more profitable. Remember, the dollar has a huge fundamental impact on what is actually happening out there, especially in currencies, right? Secondly, when you're trading currencies, you definitely need to understand interest rates correlations, high versus weak, and what impact it has in correlations. So just be aware of that. That is the segment we're going to go into next week, guys. Hope you've enjoyed, and I shall talk to you next Tuesday. God bless and goodbye, guys. Okay, guys, so what we're starting off today